Welcome to Market Movers. I'm Jim Uriel with Scott Martin.
Hi, Jim.
So, Scott, there's been enormous moves in the oil market after Saudi Arabia and Russia began this price war. Do we expect it to continue?
I think it will continue from the standpoint of, Jim, there's going to be more volatility in risk assets, especially, say, things like crude oil. Now, are we going to see big down moves like we saw on Monday? Probably not, but in the sense that there's probably going to be some more political wrangling between those two countries and maybe even the U.S.? Sure.
For years, President Trump wanted lower oil prices. He wanted that for the consumer. Now that they're here, is it a positive for the consumer or is it overwhelmingly a negative for the oil sector that swamps that?
It's both. I mean, it's positive for the consumer.
Which one more?
Well, right now, it's a negative because in anything, Jim, when you see a massive move like this, up or down, it's somewhat destabilizing to kind of the overall feel of things. But lower prices definitely are good for the consumer and for companies.
Agreed. Today we're looking at WTI crude oil. Our goal here is to provide you with different ways to either hedge your risk or express a directional opinion across specific time frames or in accordance with different risk tolerance. Scott's going to be taking the bear case on crude. I'm going to be taking the bull case. Reminder, these are examples, not recommendations. Scott.
Yeah, Jim, you scared me, man. Just like the volatility. So with respect to looking at things a couple different ways here in crude, I just feel like risk assets like crude oil, for example, have some downside pressure on them. And so I'm taking the bear case today and finding an example, Jim, that's looking, I think, pretty appropriately priced for what you're getting out of it. So specifically, Jim, looking at the May contract, the 3130 put spread for 33 ticks in crude oil. This risk 330 to make a potential 670. It expires April 16th.
It expires April 16th, but it's called the May
contract. And with respect to the levels there, Jim, that 31 level and 30 bottom level of the put spread is basically the low from Tuesday. So with respect to where crude goes and how it trades over, say, the next few weeks, and how I believe that there's some downside pull in crude, that seems like a fair level to kind of keep your eye on as, say, some of the buyers come out and the sellers come in.
And 30 is going to be a psychological level too. Anytime we trade, through the $10 increment, it is. So I don't mind that trade. I'm the other way. I think when the dust starts to settle and Saudi Arabia and Russia went at each other, I have to think at some point in time there's going to be pressure from the U.S. that we don't mind $40 oil, $45 oil, but when it gets to that, we're a big oil producer. So I think that there could be some words, some rhetoric that snaps it back a little bit. So I'm looking at, as an example, buying also the May, we call it April 16th expiry, the 35-36 call spread for 48 ticks. So this trade risks $480 to make a potential 520. So let's basically call it 50-50. The May futures are currently trading 33.90. The way it's moving lately, though, as far as volatility goes, if it goes up, it's going to go up. If it goes down, it's going to go down. Agreed?
Yes, I'm just not bullish on crude here.
Sure.
And the only thing I would tell you is that I believe the pricing on, and I looked at call spreads too, just to kind of get a lay of the land, and I think the only issue with me is the pricing on the call spread, and especially the one you highlighted there, is still a little bit rich for me to put on at that level, let's say.
Okay, Fed coming up next week. Do they got to cut 50?
I think at least, because that's an interesting point. The Fed making that emergency cut just a couple weeks ago laid the groundwork for definitely, I believe, a cut that's coming in here soon, and it's probably got to be big.
I agree. Thank you for joining us on Market Movers. I'm Jim Uriel, where we are helping to make you a better trader.